Hello investors, welcome back to the Invest in Wealth channel. Today's video we're going to do a little bit of a portfolio update, see the trades I've been making this week. We did get a couple more dividends that I've reinvested back into my stocks here. We're also going to go over some market news, kind of what's moving the markets here. It was a pretty bad week to be in the market, and we're going to see why that is. So our portfolio is sitting at $144,563. Has dropped by about $3,000 this week, which is not great, obviously. So our first home savings account here, last week we're down $100 or 1%. In our tax-free savings account, last week we're down $570 or 2%. In our non-registered account, we are down about $1,500 or 2%. And in our, take a look at our RRSP, last week are down $130 or 1%. And take a look at the crypto here. Last week we're down $162 or 7%. So what kind of happened the last couple days here, or today mainly, we saw the Nasdaq drop more than 2%, worst day since February, as Fitch downgrades ignites the sell-off. So what this means here, Fitch is a major ratings agency who kind of sets the ratings for companies for bonds. So they cut the US from AAA rating, which is the highest they can get, to AA+, which is the second highest. So that kind of got investors scared a bit. A lot of people were selling off and taking profits. That's kind of why this week has been a little bit down. It's also earnings season, so the markets are mixed from that as well. Going to my activity here, we did get since my last update, we did get a $105 dividend from TD. We also got $1 from CP. Couple staking rewards. From that TD dividend, I did invest in another share of VFV, so we're increasing my position in that. I also had some cash sitting in my first home savings account, so I did a fractional buy of VFV. Yesterday, we had some dividends from my covered call ETFs here. I get these monthly. So we got 55.55 from ZWC and 19.55 from ZWK. With that money, and we had a little bit of funds as well in the non-registered, picked up another share there of VFV. Really starting to look to increase my position in VFV. My portfolio is mainly based up of Canadian companies, so I'm really looking to get that US exposure and growth, just trying to diversify a little bit there. So in total, we own about 43 shares in the first home and then 10 in the non-registered there. I'm really looking to build in my non-registered account and probably start a new position in my tax-free as well, so that all the gross there is completely tax-free. One stock that I do have my eye on right now that I'm considering buying back in is Canadian Utilities. This stock has got hit hard the last week and the last month and even last 3 months, down about 21.5% there. Canadian Utilities, they're a dividend king here in Canada. They have raised their dividends 52 years in a row. So this is a great dividend growth stock, and it's very cheap right now. If we pull up a different chart here, which I will do, we will see that it's, I think it's at a 10-year low right now, and it's soon going to hit its support level of about $30. So I'm going to show you a chart of that. All right, we got a bit of a better chart here pulled up. I really like TMX's website. They give a lot of information as well as some nice charts here. Anyways, looking at the 5-year chart here, We do see some resistance at the $30 mark. So right now I do feel like this is a absolute fantastic time to buy. Going back 10 years, we do see that same pattern there as well. A little bit of resistance there. This stock has been, this is honestly just a great place to buy if you're looking for a value stock. They also pay a fantastic dividend of close to 6%. They pay this out quarterly. Their 52-week high is 41.51, and their 52-week low, which I think it actually hit today, yes, it did, is 30.64. So nothing wrong with buying a stock at its 52-week low there. So definitely looking to pick up a nice position in Canadian utilities. Another stock that I do have my eye on, that I do own currently, is Go Easy. This stock is very interesting. I own 17 shares. It is a small position in my portfolio, but I am up just about 25%. My average cost is 103.66. I did buy this stock initially at, I think it was about 111 sometime back here maybe. And then it did dip quite a bit down, even to the high 80s. So I picked up a few more shares here. I wish I did buy some more, but that's kind of the game. You never know what's going to happen there. But this company does release earnings August 9th. Every time they release earnings, the stock just skyrockets. So hopefully on August 9th, it will do the same. Looking at the chart here, it might be hitting a little bit of a resistance point at 130. So I might be looking to sell this position and buy maybe Canadian Utilities or another stock, and just take my profit and run. But this stock has about $2 billion market cap, very low volume stock. That's why it's super interesting. I think once institutions kind of realize how good this stock really is, we will see some volume increase, which will therefore increase the price up, hopefully hitting its all-time highs back in the 210 price range again. But yeah, this is a very interesting stock. I do your research on this. It's done great in the past here. About a 3% yield, which is awesome there. And they have a very small payout ratio as well. So this would be basically a dividend growth stock. They do kind of payday loans. They lease out appliances, computers, electronics, furniture for people who can't afford to pay cash for them. So it is a very interesting company there. Going on back to my portfolio here. RSP, TXF is kind of carrying that along. This is my biggest holding in my position. It did reach a 52-week high this week, and then it kind of dropped down there a bit with that whole bond rating cut there. But other than that, I think that's kind of all I wanted to show you guys there. Hopefully you guys learned something new and enjoyed the video, and I'll see you next week for another update. Thank you. Bye.